welcome to Edison TV. My name's Michelle Livings and I'm joined today by Toby Woolrych, CFO of Renewi. Toby, thank you so much for joining us.
Great to see you.
And in person.
Isn't that
finally.
Wonderful?
Yes, it's really, really lovely. And that's sort of the whole COVID-19 pandemic and the effect is kind of what we're going to be talking about a little bit today with the results. First of all, would you say that Renewi is back to pre-COVID-19 pandemic activity levels now across the business?
Largely. I mean, it was interesting because the COVID experience saw waste go down in one place and up in another. And we've seen that reverse. So hospitality is recovering, but construction and bulky waste back down again. But we've seen Belgium, which was the area most impacted by COVID, bounce back very significantly in this 6 months. We're still a little bit below the pre-COVID levels.
Has the way Renewi is operating changed as a result of the pandemic? Or are there maybe other initiatives in place to improve business efficiency?
Well, I think that like most companies, that COVID required us to look at our discretionary costs and our variable costs and bring them down last year. And the good news is that as the volumes have come back, we've kept tight control of those costs. We also closed about 4 sites last year, delivering some structural benefits. But more important than that is our Renewi 2.0 programme. That is about digitising and modernising our business, harmonising our processes and creating a more scalable business. And that's going really well. We've launched My Renewi, which is a customer platform, and Pair, which is a procurement platform. And we're making good progress with those, with an intended saving of 20 million euros over the next couple of years.
Fantastic. At ATM, actions to re-establish thermally treated soil operations and migrate towards graded building materials are being run in parallel. Could you provide us with an update on the progress in both aspects?
So this is about clearing the decks, opening those new markets and then pulling in the contaminated soil to get back to the full production and recover the 20 million euros of EBIT that we'd lost there. In terms of clearing the deck, really good progress. We had about just over 1 million tonnes of thermally clean soil we wanted to place in the market. A third of that has gone in the first 6 months. Another 250,000 tonnes likely to go in the second half. If you look at the manufacture of filler, sand and gravel, the new graded product, that's also going well. And if you look at our Capital Markets Day video, you will see Martins Baton and Hyman's, 2 big construction customers, talking about their need for these secondary materials. The challenge is at the front end, the pulling through of contaminated soil, where we've seen quite low soil input in this first 6 months, partly COVID related, partly related to delays in securing some inbound permits. So as a result of that, we're turning down our throughput in the kiln in the second half, and we'll pick it back up again when those flows improve.
Okay, that's good to know. Could you also provide an update on the Recyclates market and the pricing levels that you're seeing?
So Recyclates have driven our record performance that we've just reported. Recyclates hitting multi-year highs, particularly for us, paper, cardboard, metal. Now, some of those benefits we think are structural. If you think of paper and cardboard, we do more and more internet shopping, which requires more domestic cardboard or within Europe cardboard consumption. So we think that's permanent. Metals are coming down again, and we think that's something will moderate over time. But the fundamental is we're seeing a big improvement now in materials pricing. We think that will, a good portion of that will stay. But looking beyond that, if you believe in a circular economy, then secondary materials are going to become scarce materials. And we should over time see a decoupling of their pricing from being a dirty discount price to virgin to being what they are, scarce and valuable raw materials.
Now that core net debt EBITDA is below 2 times, could you remind us what Renewi's capital allocation priorities are?
Well, we were really pleased to get the leverage below 2 times, 2 years ahead of the board's expectations. And that opens up opportunity for capital allocation. Our primary objective with our market transforming in a positive way as it is to invest for growth, which can be in organic or potentially bolt-on inorganic opportunities. We want, within that framework, to keep the leverage under control, which broadly means keeping at or below 2 times. Yeah. And then, of course, we will keep under close review the timing of the reinitiation of a dividend.
So there's clearly lots of investment opportunities for generating higher business returns. Could you explain what Renewi is doing to progress in this way?
Well, the last 6 months have been really exciting, actually, because 2 years ago, we laid out our innovation portfolio, which we said would deliver another 20 million euros of earnings by the end of 2025. And in the last 6 months, we have been putting that capital to work and committing it. Just 2 weeks ago, the King of the Netherlands opened the first bio-LNG facility in Northern Europe, which is a joint venture with Shell and with Nordsol on a Renewi site. And a really important way of introducing carbon-free or low-carbon transport solutions for the future. We have invested in the filler sand and gravel projects at ATM, which provide up to 1 million tonnes a year of secondary materials for companies like Heymans and Martins Beton. And most significantly, we have now committed 60 million euros to invest in 3 advanced state-of-the-art sorting lines in Flanders that will meet new legislation that's coming in place in 2 years, which will require the entire industry to move to a different way of sorting, and we want to be at the cutting edge of that.
Wow, that's a busy 6 months. That's fantastic, very exciting. Let's talk about climate change. Of course, we've got the COP26 climate event that's ongoing at the moment at the time of speaking. When you think of Renewi, what are you most proud of when it comes to climate change?
Well, I think Renewi has really set the agenda over the last years of moving away from being a waste management company to being waste to product. We don't do incineration and we don't do landfill. Everything Renewi does is focused on its purpose, which is to protect our world by giving new life to used materials. Now, we've got a recycling rate now of 65%, which is probably at the top end of the industry. And we've now launched Mission 75, which is to get that up to 75% over the next 3 years, which really will be new territory for companies doing what we can to try and give that new life to used materials, improve circularity and prevent climate change.
Yeah. One final question for you. As well as acknowledging the company's undoubted environmental and sustainability credentials, with the proportion of waste being recycled increasing and higher value being extracted from secondary waste streams, should investors be viewing Renewi as a growth story?
Well, we'd like to think so. The business made 75 million euros 2 years ago, 73 during the COVID period. This year consensus is now 100 million euros or thereabouts. The outlook, we've then got these 3 levers delivering an extra 20 million each. So Renewi 2.0, ATM and our innovation portfolio. So that's another 60 million to come over the next 3 years or so. But then looking beyond that, as you say, it's about circularity and sustainability. If we are to achieve the ambitions we have, not just at COP26, but the need to meet and prevent climate change, then the world needs to become more circular. It needs to increase its use of secondary materials, and that has to be good for our business model as the leading waste product company in Europe.
Well, listen, thank you so much, Toby, for coming in and chatting to us about that. As always, it's fascinating to talk to you, so thank you.
Thank you.